We are here with Stephen Robert from Bedrock Credit America. Stephen, thanks for joining us. Why don't you tell us a little bit about yourself, what you do, how you got into things, and stuff like that?
Excellent. Well, thank you so much, Carl, for having me. Like Carl said, my name is Stephen Robert. I'm the CEO of Bedrock Credit America. For the past 16 years, we've been doing credit education and restoration. That basically means we come out to you, the general public, to our realtors, partners, to our mortgage partners, and we teach people anything and everything they need to know about credit. So that's what we're really all about here at Bedrock Credit America, is dispelling the myths about how credit works and giving the people the real information that they need.
Awesome. And so when I think of credit, it's always like this big mystery to me. And I know it's almost like a shell game, right? Like, get a credit card, pay off a little bit of this, that'll bump your score. So you know all that stuff, right? That's basically
Yep.
what you do. You know how to fix things. And what's the most common issue that you typically see? So for instance, from a mortgage
Yeah.
perspective, right, or from a buyer perspective, what happens to us is we'll get a call from somebody, we'll send them to a mortgage person. Of course, there's trouble, right? And it's like, oh, geez, and then they need help. And some mortgage people are good at guiding, and knowing what to do. And if it's kind of a simple fix, but I would imagine if it's a bit more intense, we may need you, right? Is that?
Yeah, absolutely. First and foremost, if there's a lot of trouble going on there, then speaking with a professional such as myself really makes a lot of sense. But the first thing, the question kind of had me nodding my head a moment ago was, what is the biggest thing that I see? And the biggest thing that I see is that people are using free websites to monitor their credit. And then they're like, oh, look, I have a 700. I'm all set. I want to go buy a mortgage. They go to the mortgage company, or they go to you, you refer them to the mortgage company. And then all of a sudden the credit gets pulled and it's really a 620.
Mm,
And they flip out and they're like, I don't get it. What's happening? I'm looking at this website. And what people don't realize is that there's a significant difference between credit reports and credit scores, what these free websites are giving them versus what the banks use.
got
Because what the banks use compared to credit reports and credit scores are FICO credit reports and credit scores. And not only that, but there's actually different versions of your FICO score. So when you look and you say, oh, well, FICO score, yeah, I know what that is. It's on my bank statement or my credit card statement. And they think they have a general idea. The problem with that is that's a newer version. So you could still have a 680 on your bank statement, and now you pull credit and it's really a 640. And
got
it's because the mortgage companies not only use a FICO score, but something known as FICO Classic, which was the algorithm developed 23 years ago. And that's what we're currently stuck with still. So biggest thing is, where do I get this information? How do I actually understand what the banks are seeing? And my clarification there is that there's two ways to do it. Number one, you go to the bank, have them pull credit so you can actually see what's going on.
right.
Or if you're just wanting to prepare for the future, you can have them go to myfico.com, myfico.com. Myfico.com is literally the only website to give you this exact same information that the bank uses.
Right.
It's
So it's
not going to
not
count.
freecreditreport.com, not all these other ones that are trying to, which are basically advertising, vehicles, right? That they're trying to make money somewhere.
Right. Now, the freecreditreport.com, the other free websites really aren't going to be giving you much information. However, annualcreditreport.com will give you your 7-year content for free and is not going to count as an inquiry. So if you just want to see your content, you can go to annualcreditreport.com. But if you want to see your scores, the mortgage scores,
Gotcha.
myfico.com is the only way to do that.
Gotcha. Okay. So that's a good distinction, is that annualcreditreport.com will show you everything, right? It'll show you everything that's
Yes.
on there, but it won't score you. It won't give you
Correct.
that FICO score. So let me ask you this, because what I've noticed is, like, when I log into my credit card and stuff, they give me a score, right? It's like the newest thing. It's like it's all these scores everywhere. So what you're basically saying is, if I just to do that, is that's not necessarily right? That's not exactly what lenders look for. It's kind of a
Exactly.
different one, or it's a different class of score. So you can only take that at kind of face value as to what it is. And then, so what you're seeing a lot of times is people come and and that score is widely different than what they see on their thing, and they want to know why, and they want to know how to fix it, right? Cool.
Right. So once you actually can wrap your head around, okay, there's different scores and there's these credit scores that are worthless, and I need to understand my FICO scores and whether you're getting that information from the bank or from my FICO, now you're staring at, well, okay, I'm stuck with a 620, 550, whatever it is.
Yep.
What do I do to fix it? And then that's where you kind of have to dive in, talk to a professional, and actually have them explain to you in full detail what you're dealing with. Because people make such big mistakes thinking it's going to help themselves, and it's really shooting themselves in the foot.
So on that note, so that happens. How does your service work? What happens when somebody calls you?
So anybody that calls me gets a free consultation. I have them get a copy of the report through the lender or through myfico.com. I take a look at the report. We go through and create a full action plan line by line, outlining all the negative account activity, what needs to be done to deal with it, and more importantly, how to deal with it. Because most people look at these and they say, okay, yep, oh, a couple collections, not a big deal. I'm just going to call and pay them over the phone, right? No. Doing that can absolutely destroy the credit and put you into financial peril without even realizing it. Number one, because you never want to give out your personal financial information to any type of collection company. And number two, the system is built based off activity date. So if that collection was 2 or 3 years old and now it gets paid and it now becomes a more recent event, you're not going to help your score. You're going to hurt it.
Wow.
It's going to drop.
Interesting. Very interesting. So yeah, that's something like the public doesn't know. They just think, oh, let's pay it off. So how do you do so what happens then that you can somehow backdate it, or how would you go about paying that off so it doesn't affect you?
Well, it's going to need to get paid off in order to help the scores, right? But it's about how we pay that off. So number one, we never put ourselves into a payment plan. Number two, when we're ready to pay it, we get a settlement letter in writing. And number three, when we do pay it, we only pay it with a money order or a certified bank check, never a debit card, credit card, or checking account. And we make sure that we follow up with the credit bureaus to actually remove the negative data off the credit after we get it paid.
Gotcha.
And by the way, the one thing, I'm sure you've heard this also, you've been around a while, these credit repair companies that tell you, don't worry, you don't have to pay any of your open collections. We're just going to dispute them and make them go away. It's hogwash.
Yeah.
Doesn't make any sense, and it's not something that can be done. Debts are going to need to get resolved in order to clean up the credit.
Now, what type of negative items do you typically see? Is it collections, missed payments? What's the common place?
The biggest things are the accounts that weren't able to get paid that went into charge off, like a credit card that wasn't able to get paid. It goes into charge off. It goes into collections. It even goes into judgment. I have a whole bunch of stories about that. But it's or those accounts that they weren't even aware of. Medical debt has been huge. Luckily, there's been a lot of adjustments with the medical debt and the medical collections being reported that are going to help the consumers greatly. But still, those things that pop up on there can significantly impact this credit.
Gotcha. And here's a question you probably can't answer, but I am always curious. How long does it take, on average, how long does it take to repair credit? People, so obviously it's going to depend on the magnitude of how bad it's messed up. And if you've got funds to pay things off, obviously, and fix it. But say in a perfect world, are we talking 3 months, 6 months, a year, 2 years, 5 years? What do you normally see?
Your average is 6 to 12 months.
Gotcha. Okay.
Again, depending on what the issues are, but generally within 6 to 12 months, we can make some very good strides getting their credit in the right order.
Gotcha. Now Bedrock Credit America, now that's a nonprofit business, right? So how does that differentiate from the other companies out there, the ones you were just talking about, like, oh, we can make your stuff go away? Can you tell us a bit about that?
Absolutely. With those companies, if you're breathing, they're going to take you on, right? And with us, we're all about the education. And that's why the majority of clients that come to us, it's all about educating them and allowing them to understand that, whether it's an individual consultation or we're constantly out in the public, either virtually or in person, teaching people about how credit works. So we're really focused on the education side of things. Yes, we do provide a service if somebody's really in dire need and they need us to represent them as a power of attorney to help them settle their collections or work with the credit bureaus to clean up and remove the negative data. Yes, all of that is what we can do, but our methodology of how we're doing that is significantly different compared to these other companies that just throw mud against the wall and wish for the best.
Right. And that are for profit because, yeah, so I understand. So a lot of what you're doing is education, telling people, you know, the different ways and everything like that. You do one-on-one consulting, obviously, with people to guide them with what they're doing. So are you compensated by that? Do the people who need help pay you? How does that work?
So after we go through that action plan and we do that free consultation, if it makes sense for them to get us involved, yes, they can hire our services to work with us for that 6 to 12 month process, and we can go in there and help them.
It's all laid out.
Exactly. Yep. Most of the time, though, it's that free consultation, it's that education, it's allowing them to understand they can handle this themselves and push themselves in the right direction.
Right.
So most of the time it's, hey, this is just how it works. This is what you need to prepare yourself for. This is what you need to do. But there are clients that say, it's too much for me. I can't deal with it. I need a professional.
Right. So a lot of times after that initial consultation, people can just be off and running. They've got a game plan of sorts and be like, okay, you know, this is what I need to do. This is what I should do and things like that. Interesting.
Yeah.
What do you, if you could give the average person, say they don't have any credit issues or anything like that, but they just want to strengthen their credit. Are there any tips that you could just give an average person to say, like, you know, you want to keep you want to charge a little something every month, you know, just to kind of tweak it up. Say somebody's at a 780, they want to push over that 800 mark, you know. Any advice?
Absolutely. It's a piece of advice that I've been giving for the past 16 years that is going to be more relevant than ever in the next 24 months. Why? Because we're about to switch from the FICO Classic system, which we've had for 23 years, to FICO version 10T and Vantage 4.0. And what does that mean? The T in FICO 10T is all about trending data, which is looking at your spending habits on your revolving accounts. So the short answer to that question is debt utilization is huge. And if you have a credit card with a limit of $1,000 and you're using $900 of it, you're at 90% utilization. That's going to hold your scores down. But if you can pay that off sooner, that's going to help your scores go up. Now, the client that says, well, Steve, it's okay. I paid in full the day that I get my bill, thinking that's all right, right?
Yep.
It's not. Why is it not? Because the credit card only updates the credit bureaus one time per month. Whatever that balance is, that's what's going to show up for the next 30 days.
I see.
So people get stuck in this, well, I have high utilization. So the best thing to do is to pay down your credit cards. And my statement for my 16 years that's now going to be more relevant than ever is, I don't care if you have a $300 limit or a $30,000 limit. Put $20 to $30 on your card every month.
Gotcha.
That's it.
Yep.
Charge 20 or 30 bucks, maybe 50 bucks, like a tank of gas. Exactly. Yep. Wait for the bill to come in the mail with that $50 paid in full. That's going to optimize your credit without a doubt.
Gotcha. Okay, cool. What didn't we touch on? Is anything that you want to say to whether it's the public or real estate agents in general?
Yeah. The big thing to say is please talk to somebody, listen to somebody that really knows what they're doing, because there's so much misinformation out there. And I've had so many conversations where, oh, well, the realtor told me to just go do this, or the mortgage person said I should pay this off. And then they get to me and I explain to them how the system really works. And they realize that they just shot themselves in the foot and now they're not going to get approved. And or the other major thing that I see is if you're planning on purchasing something in the very near future, don't touch your credit. Don't apply for anything.
Yep.
Don't open anything. Don't dispute anything. Don't pay off anything that you think is negative, that it's going to help you. It won't. It's going to update your data loss activity. You're going to drop your scores, and you're going to lose the loan.
Gotcha. Okay, that's really good advice. And I know that there are a few mortgage people who I know who are utilizing you and your services and speak extremely highly of you, that, this is the guy to talk to when it comes to credit repair and figuring out these, nuanced things. So I just want to pass that along to, my agents and, the public out there, to say that, you are available, right, for these consults and everything. Where's the best place to reach you? Is it by email? Is it by phone?
Email.
Email.
Whenever somebody says, okay, I'm going to refer them, send an email. Yep. Hey, Mr. Jones, we spoke about it. Your credit's not where it needs to be. Let's get you in touch with Steven. Steven, here's Mr. Jones' phone number and email address. Please keep me in the loop. I'll reach out to Mr. Jones. I'll explain to him what the free consultation, getting the My FICO credit report, doing that action plan. And then the best part about that is I know who sent them. So that way, when I speak with Mr. Jones, you as a referring partner has full understanding of what needs to be done to actually work with this client.
Awesome. Well, I appreciate you taking the time to talk to us, and I know the agents will find this extremely valuable. And I'm sure you'll be hearing a lot from us, my brokerage, and probably me, because I do have a lot of clients who could use your help. And I think it's also important too, because a lot of times real estate agents, even the mortgage people are like, oh, they can't do anything right now, right? And for the real estate agent, we just think like, debt, right? Full stop. There's no immediate work here. I can't do anything. But from a service aspect, we need to be able to say, hey, listen, I understand your credit, because we don't know if that mortgage person is doing that or helping them or anything, but we should be able to say, hey, I've got a great guy you can call for a consult to see, if there's stuff that you can do. Why don't you give him a ring, and maybe we can position you to be in a better opportunity, moving forward, right? So I think from our perspective, that's great value that we can add. And again, thank you so much for joining us today. I appreciate it.
Absolutely. Well, thank you so much for having me. If you guys have any questions, feel free to reach out, whether it's looking at the full credit report or just answering a couple questions. I'm always here as a resource to give you that credit education that you need. Just always talk to somebody that really has a good understanding of what it's all about.
Awesome. Thanks again, Steven.
Thank you so much, Carl.